welcome to this examiner report debrief on ACCA's AAA at that strategic level, which is always a tricky one. It's a big hurdle, and that's why the pass rate is generally in the 30s. This time, December and September 2025, it was 38% back, similar to where it has been for a long time, possibly the last 4 or 5 years. Although it has creeped up earlier this year and maybe over the last year, it has dropped back down to kind of where it naturally sits. So pass rate usually the worst of the lot. But we're going to debrief the examiner report. So we're going to go through all the little details, stuff that was maybe slightly different in this one. And I'll just give you a few hints along the way of things that you really need to pick up, whether you failed this exam or whether you're taking this for the first time. And it's also worth noting this is only one of the variants that the examiner releases. So there are multiple variants, sometimes 3 or 5 variants, maybe of different questions or the whole exam. So it's something that actually, if you failed, you might not recognize some of these questions, or you may. So let's get cracking. So with the first bit that we're looking at, nothing interesting there, but question 1, always a case study question. Okay, it's always about the planning stage that you're going to be in. This is the one where you get your communication marks. This is the one where there's a lot of stuff you can do up front to set up the structure. You can do your materiality for your risk of material misstatement, audit risk question. You can do that up front, okay, and get marks really early. You could be looking at 3 to 5 marks just for the initial bits that you set up. So, 10% of the way to passing the exam before you properly looked at the technical details behind it. So really need to do that first. So this was set in a renewable industry, which kind of highlights the sustainability side the examiner likes. I said it's always in the planning stage. Okay, it's always briefing notes. Okay, it's always something that comes from the partner. And there's always a risk question. There's always and there's always some other parts to it. Usually a test bit in there too of what you're planning to do later. Sometimes ethics, sometimes other bits and pieces. So first up, we're looking at this. One of the things that might be slightly different with this one, it was a new audit client. Okay. Now, when we talk about new clients, that's typically a problem with an audit risk question, not a ROMS question. So you have to be careful with that slight distinction. Okay. And there is always this little bit of content here, partner emails, and then some other stuff, backgrounds, financials, that kind of stuff. It just depends on the nature of the question. But that partner email is where you go to first because it has all the specific requirements or for your exam. So you need to know what you're looking at first. So you look at the little summary and then you go straight to that partner email to actually see what you're being asked. Okay, and then set out what your headers and work your way through it. So what you had in this exam, business risks. Now, business risks, typically students do very well on this because it appeals to the non-auditors in the room, right? Which is, again, 80+% of students who are doing AAA are probably not auditors. So business risks are things that pretty much anyone can relate to if they were running their own business, okay? So are they going to have cash flow problems, reputational problems, liquidity problems, anything else, okay? It might be environmental disaster problems, all that kind of stuff that you see in the question. Then you've got a ROMS question, a risk material misstatement, okay, which is then going to have that focus on financial reporting. Almost all of it, if not all of it, will be a financial reporting problem, things that could go wrong or things they have done wrong. Here is your materiality where you pick up 3 technical marks straight away. So 3 of those marks, okay, that you can pick up really quickly before you've even started doing the question. Tests are in there, okay, as well. In this case, on development costs, which we'll talk about, okay, only 6 marks, which I think is quite nice as an amount. Sometimes we see it go up to 10 marks. And then ethics issues, which is generally people like a bit more. Professional issues, they like a bit less. But these are the things like, what do I need to consider before taking on this client? What do I need to consider before taking on this piece of work? Okay, so it's all that list of stuff that we typically have if we were tendering or planning a piece of work. Sometimes it's what are those bits and pieces, more so tendering. So nice split of questions. It means, as usual, about 25 marks are for risks and the other chunk of marks are there for professional skills and the other bits of the question. Okay, so it shows you between materiality, some communication marks, and those risk marks, you are talking about 30 marks of your way towards passing, okay? But that would assume you do amazingly on this. So if we roll through, okay, as I said, nothing really interesting or new in this, but as always, generic, vague answers, usually where people like writing down all the financial reporting rules they know, they just chuck them all at the page and go, oh, here's what I know. Let me tell them the financial reporting rule, but not actually relating it to the scenario at all. So that's not new. You just have to be careful with that one because, say, you're only really going to get about half a mark if you're just telling the examiner a financial reporting rule, but not justifying why it's wrong or what could go wrong. You're just relaying all of the pirate criteria or, those kind of things, revenue recognition. So first up is significant business risk. So in particular, you have to remember it's significant risk. So it's not everything that's on there. Okay, it's not new client. It's nothing to do with the audit itself. The business risks are from the company's perspective. What are they worrying about? We also care about that as an auditor because we worry about if something legislative is changing that affects the business, then it might mean they don't comply, which will result in a financial reporting issue. But we don't care about that. Okay, we care about what things are really significant that the client's going to worry about. Okay, so that's where we're pulling up all that stuff. We don't talk about any financial reporting rules. Okay, we care about a list of typical stuff. So non-compliance with a legal requirement is a really common one. Okay, in there. So it has to be something that is significant, and hence the examiner has started to talk about down here, remote likelihood, mitigated against, all that kind of stuff. So we'd want to see something that's either happened, happening, or something that's likely to be a big thing that the board is going to care about. So as we start to go into it, so generally this is really well done because lots of people can relate to it, okay? And particularly because things like strict health and safety, okay? Said strict health and safety. They use particular wording to kind of hint towards things. Okay, increasing material costs when they already might run quite low margins. Okay, those kind of things we're starting to see. If you can use calculations to prove it, then you're getting towards that analysis or commercial acumen marks as well to prove why it's more important. Okay, you don't have to write an explanation of why it's really, really important for the company in detail, but you have to say something like this would have a significant effect on, and that proves why it is significant. I said those kind of bits we're looking at in a bit more detail. Okay, as you start getting into stuff where it's a bit more industry specific. So in this question again, they talk about transporting large wind turbines. Okay, you know what? That sounds pretty hard. Okay, that sounds not like something I know anything about. Okay, and that's not the point of this exam. It's about, can you take some of the information and potentially talk about the issues that might be there. So I said, as answers started getting a bit weaker, okay, they get down that route of lack of challenge, lack of clarity, lack of finesse on why it is a risk, okay, and the implications of that. So customers being put off, customers going elsewhere, fines, regulatory licenses being withdrawn. Okay. And in this case, in particular, just-in-time inventory system, talking about whether that should be appropriate. Again, it's quite specific to this scenario, okay, but it can pop up, okay, from anything from skills level in that respect, okay. But they're not expecting loads of detail from a PM exam or an FM exam for you to drop in there. As I said, some people mixing up business risks and ROMs, okay, which is not uncommon. Remember, it's not about financial reporting. It's not about what the auditor cares about. It's about what the business would care about. But we do care about that as auditors, okay? And you also don't have to prioritize them. You don't need to list. You don't need a conclusion. You don't need a summary, anything like that. Again, that's people mixing up the different types of risk questions. As we moved to our significant risks of material misstatement, again, that question wording pops up. In this case, evaluating it. So these are typically worth about 3 marks each, okay? And therefore, to get full marks, you would need to write 6 full marks, okay? So to write 3 very well, 3 perfectly would get you a pass, okay? Which doesn't sound like that much, really. But you also need to prioritize them. That's where you need to do a little bit of work, okay? So you need either to do one of 2 things, which is to summarize right at the start why each of the top 2, let's say, are the most significant, highly material, or in the conclusion at the end, okay, you can do that, okay, not just list them out, okay, which was a way that you could do it a few years back, okay, you just need to write down, I said, a summary at the end possibly might be the easier way, or write a sentence for maybe the top 2 that you think are there. So very much causes problems here because people start to talk about financial reporting issues and don't really explain them. The other thing I said that should be guaranteed marks, okay, you should be getting at least 2 to 2.5 marks on this, hopefully all 3, okay, is the fact that the materiality, because you know it is in question 1, so you need to go straight to it and write it straight from the off, so you bank those marks and don't forget about it, okay? So it sits in a ROMS area, okay, in this case. And you have to tell them the banding, right? So you have to tell them the benchmarks, which they've said 0.5 to 2. Typically, it's actually 0.5 to 1 we talk about across a lot of exams, but 0.5 to 1%, okay? As long as you're justifying that it's the lower or the higher or somewhere in the middle, okay? Just pick a range, half, 0.75 and 1 or something like that, but you need to justify it. So start off by following whatever the guidance was, in this case, revenue, then do the calculation itself and show them the range, then select a part of the range, okay, and justify it. And the justification is where I say people lack the most, okay, explanation. It's normally, oh, they're a higher risk client, like in this case, so we'll pick the lower one, okay, which it does go lower the higher the risk because they work inversely, but you got to give me some explanation on that. So that's really common, and that's what they're talking about here. Okay. As we then move, so you can talk a lot of information from the examiner about lack of justification and the whole materiality. They care about it because it's 3 technical marks. It's really, really good for picking up marks, right? But as we said, when we get into the actual evaluation bit of it, we start to get into a problem where people talk about stuff that isn't important, or people start talking about stuff and just not really given the detail. Now, there wasn't anything really, really complex in terms of financial reporting in here. It was stuff that people could have picked up from FR. Okay, so there wasn't anything really, really SBR in here. Okay, maybe the context was a little bit more complicated. Okay, so if we start to look at this stuff, revenue recognition is a classic. So they had separate performance obligations, and just saying they've got separate performance obligations, that doesn't really tell me much. You have to go into that level of detail of saying, therefore they would be split out, and therefore which one would be a deferred liability. Okay, those kind of things would be where we start to tell them a little bit. So having maybe management bias, because they always bring it up front, okay? Very few, if any, scenarios I've ever seen where management gone, don't worry about that revenue, I'll leave that for a couple of years and defer it, and they get that wrong. It's pretty unlikely. They normally go all of it now, and we have to go, oh, you should really be deferring that, okay? Based on the obligations, separating them out. So that's what we were looking for. We don't care about this. I don't care about the numbers. The examiner doesn't give you credit for the numbers. Okay, we care about the specific rule that's relevant to this question, not all of the revenue recognition rules. So that's where we start to see that drop in. Okay, so they again, commercial acumen type stuff, starting to talk about how that is really significant to revenue. Okay, so if our threshold is 0.5%, that's many, many times our materiality level. That's something they've got wrong. As we start to move down, legal claim, classic, but in this case, it's slightly more complicated scenario, okay? But again, they talk about IS 37. You're looking for things like, is it probable? Is it possible? What is the extent of it? Should it even be there? Okay, usually that would mean that liabilities are understated or it isn't there at all, okay? And whether it should be a contingent liability, which should only be disclosed, or whether it is something that actually needs to be a number, okay, in the accounts. Okay, so again, we're looking at that, challenging the fact that they've said it shouldn't be there when we might have evidence otherwise. As we carry on going, intangible assets, generally okay, but when we get something that is as clear, so an impairment is not as clear, it doesn't say, oh, this asset is impaired, it will give you some kind of indication of impairment. That's a harder part of the question where there should be some kind of judgment. So where you see they can't use the asset, where you see maybe the asset's damaged, they're not going to use it again. Okay, we're starting to have that model of where we compare that value in use. Okay, so again, that's not as obvious, which makes that slightly more difficult. Hence, it wasn't answered so well. And then as we moved on, it said we started talking a bit more about the lifespan of the model, okay, and challenging the useful life, because whenever there is an estimate, you generally have to challenge that estimate. So if they're telling you in the question there's an estimated life, okay, and you probably should challenge that, especially if it's a significant asset in the business, or more so if there's any evidence that that might not be the case. As you move to development cost, again, I'm concerned that they've developed costs, which isn't the official terminology, but I'm concerned they've included costs that actually shouldn't be there, okay, because their judgment around whether they've met the criteria, okay, again, if we said something like they may not have met the criteria for inclusion, or for this case, capitalization. We're on the right lines, but can we say something, or can we show something from the question that proves that? So maybe they've mentioned something in the question about it's not clear if it's technically feasible yet, in this case for the second model. Okay, well, that's very clear proof, but they may not say technical feasibility. They may say they're struggling with the manufacturing to make it work, something a bit more general. Okay, so that's the kind of issue that we're really looking at. We do also have owner's contracts, which pops up in FR, okay, as well. Again, slightly more difficult because you have to, owner's contracts is one you recognize up front. It's slightly more difficult to pick out in the question, but it's not really technical in terms of the description you'd need to give, okay? And then as I said before, prioritization, really, you need to have a bit more than just having them in order or say it's really material. You need to give a bit more of a bit of wording around this because you're going to get that skill, that judgment mark. Okay. So therefore you need to do a little bit of work to get that. It's quite a hard mark overall to get. It takes a bit of work. Compare that to the materiality marks, and materiality is great marks. Okay. This prioritization is a little bit more difficult to achieve those marks. As we then move to the principal audit procedures, okay, as I said, that's where we really see things go downhill very quickly. Okay, principal audit procedures, not only because they need to be commercial, they need to be relevant, they need to be written well. And this is cause where a lot of people that I mark will get 0 out of 6 on this, okay, because they're just not written as procedures, or they're just not relevant, okay. So again, with development costs, what I really care about is the fact that should they have been developed. That's my real concern. I don't care if they've calculated it wrong necessarily. I mean, I do, but that's not the key. Hence, in this circumstance, it says principal audit procedures. That's what I really care about. So I don't care about if the calculation necessarily is okay. I will care about that at some point in my audit, but that's not really what I'm concerned about. And that was hinted to in Exhibit 4. So that's why you'll see really polarized marks in there, okay? The answers were mixed. Actually, that's quite a nice way to describe they weren't very good, okay? So lots of people talking about the breakdown of costs, accuracy of the costs. Again, that's not a principal problem we'd expect. Okay, I'm expecting the client knows how to do that. So in a question 2 or 3, you know what, you go for that. But in a question 1, that's not the key problem. Okay, and that's the kind of nuance that people really struggle with in this exam, because they feel like they've got that confidence, they've got an answer that's relevant, and actually in question 1, it isn't relevant at all. So lots of things about that, whereas we want to challenge that. Is it appropriate for them to have them in intangible assets, i.e. capitalize them? So think about your criteria for this. So we are looking at things like is it technically feasible? Which I said, we talked about the issues with the model. Okay, that's the kind of stuff we're talking about. We're not talking about stuff, I said, where we're looking at bank statements in this case, right? Because again, that's telling me the amount that's included when they paid for it. It does not tell me that what they've bought can then be turned into something that's going to generate them money in the future. So again, sufficient and appropriate audit procedures sounds fancy, but it's really just coming back to, are they commercial? Do they look like they're actually relevant to the key risk we have here? Okay, i.e. not the calculation itself. We worry about, are they appropriate? So thinking about invoices that would have demonstrated something. Okay, yes, it would demonstrate the actual cost, but are we seeing something that would actually be allowed to be capitalized? Does it look like it's technically feasible? Can you look at some kind of report they might have generated? However you describe that. Do they have an ability to sell it? So could you request from management any orders they've had for this? So that would be a pretty good indication they can sell it, right? So it's those kind of bits. And then, of course, that structure to the answers where lots of people then fall down. So this is why question 1's tests can be really hard work to get those marks if you're not practicing them over and over, getting that feedback on those questions. Okay. So pretty difficult, but once you get the hang of it, you can really drum up some procedures, particularly in question 2 and 3, where you have a lot more flexibility in terms of the level of testing you can do, but the structure of those tests needs to be exactly the same as you do in question 1. Okay, good. Final bit then, and I'll do a separate debrief on question 2 and 3, discuss the ethical and professional issues, okay, of the request made by the audit committee and recommend any action. So you need to go in here, and they're talking about a sustainability report, okay, as part of the integrated report. So yeah, you might think straight away, oh, I don't know what goes in that. How am I going to test the carbon emissions of that company? Well, they went straight in the question and said they've got a separate team or a specialist in there or something like that. Okay, then it completely wipes out that point. So ethical issues are classic. Is it going to form part of our audit itself? That would be a self-review threat. If it's going to increase our fee reliance, self-interest threat. If it's going to be something where we're going to have to represent them, okay, to their clients, advocacy threat. So all the classic stuff there, but it's about, can you explain it enough, okay? Because at AA, you may have explained it as, there's a self-interest threat because we're going to have a high fee reliance. At this level, that's not enough. You're not going to get 1 mark for each point you do like that. So in this case, I said, particular requests for additional services. Hopefully your classics you're thinking about are fee reliance. Okay, are they separate teams? That's the kind of thing we should go down, but the question will allude to it. And hence the answers here were actually quite mixed given the information. Okay, so if you can talk about why it's a self-review threat, okay, because potentially that information you've already seen, or it might relate to something else, okay, because we've maybe been involved in producing that information. Mentioning the use of a separate team, great. Okay, that would have been great. Okay, if we'd had any question that hadn't mentioned it, but it was already in the question that they were going to use a separate team. So already done, already a professional issue they have considered. So if you put that, you get nothing, because in this specific question, it's already been dealt with. But as you flow into the other bits, okay, it said it would, assuming management responsibility, because you're producing potentially the report that then is going to go as part of their annual report. And then you're going to review that as an external auditor to assess whether information in the financial statements are consistent with it. So you're probably not going to challenge yourself. That's where the self-review threat comes in. That's where the objectivity challenge comes in, because you're not going to challenge the team that sits in the room, okay, who maybe you go out for lunch with every so often. Okay? The other bit I said, the management responsibility is you're making decisions about maybe judgments about information that goes in that report. That is you taking on the client's role. That's that management threat, management responsibility that we typically see. So that's why this was a bit more difficult than your traditional, oh, I'm doing another piece of work. Okay. So I said, better answers talked about the self-interest threat for the fee reliance. Again, prove to me why it's fee reliance. Give me the thresholds if you can. Talk about the significance. Is it ongoing? Is it a one-off? Is it a contingent fee? Like all that kind of stuff, but only where things are relevant, okay, that come from the question. Don't make up that it's contingent fee if it's not in the question. As we then go a bit further, I said the technical marks and go beyond that. Is it something where you actually explain the implications? So what happens if there is a self-interest threat? Not just the fact that we don't challenge them. What's the implications of not challenging them? Okay, well, maybe it's our reputation, maybe it's a liability, all those kind of things. So again, normally a lot of people get half marks or 1 mark when they should be getting 1.5 and 2 for each ethical point that should be made. So that's where they think, oh, I haven't got anything else to say, and they don't get the 50% of marks on what should be quite a nice question. So it said, typical things, specialized nature, resources to complete it, timescales, they're all classic professional issues that we see in these kind of questions. And actually, it's quite similar to one of the questions they had in the question 2 or 3 that they did later. So if you got this exam, you'd have felt like you're repeating yourself a little bit, which sometimes does happen. Okay. So I said professional skill marks, communications is generally, it's 4 marks. That's it, max. Remember, with professional skills, you don't get told which professional skills you're being tested on in this exam, okay, for each question, whereas in SBL particularly, you do. Okay, so things like formatting are really important. Okay, templates header in question 1, that's the only one with communication skills as well. Hope that helps. I'll do another debrief on question 2 and 3 in a separate one, so you can kind of get a break from me talking. Okay. Otherwise, if you've got any questions, anything to clarify on this, please drop me a message in the comments. Okay. And otherwise, catch you on another webinar.